all of this stuff going on in the market, which could be characterized by a hater or a skeptic as manipulation. Wall Street is just one of the actors, but if they do stupid stuff, if they like manipulate, it's capitalist trading with an agenda that's different than yours or mine, because they're going to short it at the top, they're going to cover their short at the bottom.
Markets don't crash by accident, big players make them crash. Traders manipulate prices by offloading massive amounts of assets, triggering stop losses, and forcing liquidations, all so they can buy back at the bottom. That's the latest insight from Michael Saylor, executive chairman of MicroStrategy. Bitcoin has been dropping, but according to Saylor, this isn't random. He believes powerful traders are intentionally driving prices down for their own gain. Large entities strategically dump assets, setting off a chain reaction. Smaller investors, who set stop-loss orders to protect themselves, get wiped out as the market freefalls. As panic spreads, retail traders rush to sell before losing even more, further accelerating the price drop. Those without enough capital to weather the storm are forced out, leaving their assets up for grabs. That's when the same traders who triggered the crash step back in, buying everything at steep discounts. They walk away with more, while regular investors are left wondering what just happened. Each cycle, retail investors take the hardest hit while the wealthy only get stronger. Stay tuned as Michael Saylor breaks down what's really happening with Bitcoin and how you can protect yourself. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
When the price moves in random directions and when it moves in the opposite direction of the way that it ought to naturally move, I think there's someone with a lot of capital that's either panicked and they're doing something that I deem to be stupid or foolish, or I think there's someone with a lot of capital that has a different agenda than the rest of us, and we don't understand it, and that creates volatility. I don't think it's just Wall Street. I mean, the truth is, Bitcoin's just a free market. It's the freest market in capital in the world, and the definition of free market is anybody can manipulate it any way they want until they run out of money. So if you have $100 billion of Bitcoin and on Saturday night you want to sell all $100 billion of Bitcoin all the way down to 1 penny, maybe you can do it. And maybe you have an agenda to do it. I'll probably be buying it when it gets down to the 1 penny, maybe when it gets to the $1. I mean, if you want to call it manipulation, you can, but I wouldn't refer to manipulation as much as enable. It's enabling you to do it, right? Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60. It's always more volatile, but the reason it's more volatile is because if you had $1 billion and you just had a panic attack and decided the world's going to plunge into chaos, and if you wanted to take a $10 billion or a $100 billion short position on the economy, the only way you could do it was Bitcoin. But Bitcoin would give you not just the ability to short the market, it would give you the ability to short the market in 1 minute. It would give you the ability to short the market with 100x leverage or 50x leverage or 20x leverage. Okay? The truth is, on Wall Street, normally you can't even short more than 2x. Like, it's very difficult for people to get extreme leverage. I guess in the CME market, they get a bit more leverage in the future, so there they can bring more leverage. But, I mean, Bitcoin is really providing everybody in the world with the greatest degree of liquidity and leverage and credit. And maybe you're a fool to short it, but maybe you're a fool to go long the other way. But the point is, that's what makes markets. Everybody's got their opinion, and you might think that you know better, but if somebody wants to panic sell $1 billion of Bitcoin on Saturday night because they heard that missiles got launched because they saw it on X from a stupid troll account, your position is either you're not allowed to do it, I'm going to censor the transaction because you're just not allowed, and I'm the God King of capital markets. If you're stupid enough to sell $1 billion based on a troll account because you saw a meme and there was no missile strike, or maybe there was, but it didn't matter, you're just going to lose the money. You won't have the money.
According to Saylor, Bitcoin's extreme volatility is what makes it a truly open market. Unlike traditional financial markets where shorting and leverage are limited, Bitcoin allows for extreme leverage. This means large traders can short the market in minutes and at a much greater scale than on Wall Street. Saylor argues that this isn't necessarily manipulation but rather an inherent feature of an open financial system, where anyone with enough capital can move the market until they run out of funds. Bitcoin's extreme liquidity and accessibility allow massive trades that can cause prices to crash or skyrocket instantly. Some traders might act recklessly, selling billions based on misinformation or emotion, while others take advantage of these fluctuations to accumulate assets at lower prices. In Saylor's view, this dynamic is what makes Bitcoin the freest market in the world, where risk, strategy, and capital determine success or failure. Now, let's go back to Michael Saylor as he dives deeper into the topic.
Further.
And what I would say about all this volatility and all this trading is the very intelligent capitalists that make the right trades are getting richer and more powerful and more influential. And the really stupid capitalists that make the wrong trades are getting poorer and they're getting less powerful, right? And they're becoming irrelevant. And the marketplace is much more complicated than you or I or any regulator or anybody on the face of the earth. And the real beauty, the insane beauty of the Bitcoin network is it is the world's greatest free market. Maybe the greatest free market of anything. I mean, I wonder, is there any product in the world that is traded globally 24/7, 365 in multi-billion-dollar components where everything is connected to everything all the time? You can't short Manhattan real estate. You can't short gold. You can't trade iPhones. Like you can't panic sell 1 billion iPhones on Saturday night because you think Apple's going under, and you can't, roaring kitty buy 10 million iPhones on Sunday morning. And so I don't know that there's another free market to buy and sell things with or without leverage at any point, anywhere, that's greater than Bitcoin. So I just think Wall Street is just one of the actors, but if they do stupid stuff, if they manipulate, see, the thing is you can manipulate the price of a stock at 4 p.m. in the evening knowing that no one's going to touch it until 9:30 the next day. You can't really do that with Bitcoin, because if you manipulate the price of the stock at 4 p.m., it's going to trade another 6 hours. So if you manipulated it down, you would be the loser, because people would be buying it cheap, in Japan and China and Europe while you're asleep. And then you're going to wake up and you're going to find that you're naked short and you've lost your shirt. So I think this is a game for adults. And, maybe they short it and they buy it back. And maybe you don't like the fact that they shorted 1 billion in the morning and bought back 1 billion in the afternoon. But a free market person would say, hey, they created liquidity. And because they created liquidity, it trades 10x as much as it would otherwise trade. And because it trades 10x as much, that means that you can actually extract $1 billion in 5 minutes instead of $1 billion in 5 months. Right? It's like, you ever see a gyroscope? I'm spinning the gyroscope really fast, and you're like, well, wait a minute, it's not going anywhere. What's the point of spinning a gyro really fast if it doesn't move? Because the answer is stability, right? It creates enormous stability. We use it in inertial navigation systems. And so all of this stuff going on in the market, which could be characterized by a hater or a skeptic as manipulation, it's capitalist trading with an agenda that's different than yours or mine based on their local knowledge. And they're creating liquidity, they're compressing the spread, they're creating credit, they're creating stability, they're actually diminishing the volatility because they're going to short it at the top, they're going to cover their short at the bottom. They're creating a stable framework, and the inertial navigation systems matter, the gyros matter, right? All of these things have a physical value, right, in the economy. And I think anybody in business or anybody that studied life much, they realize that in a city or in an economy where lots of actors are able to go about their business doing things that you don't understand, that you wouldn't do, normally that maximizes productivity and quality of life, right? And if we only agree to do the things that you think make sense, well, every idea that you never thought of is never coming to you. And the truth of the matter is, you'd probably be dead, because there's probably 99,000 things that get done in this society that you can't do, that you wouldn't even think to start doing, that are going to save your life one day. And so I just think, let the free markets market. That's what they're meant to do. That's what makes the entire world work. That's what lifts humanity out of.
In other news, Democratic lawmaker Gerald Connolly is urging the U.S. Treasury to halt Trump's plans for a government-backed cryptocurrency reserve, arguing that it's not in the best interest of the American people. Connolly claims that the move is more about enriching Trump and his wealthy allies than serving national strategy. In a letter to Treasury Secretary Scott Bessent, Connolly criticized the idea as reckless, saying it would waste taxpayer money and provide a safety net for Bitcoin speculators. He also pointed out Trump's personal connections to the crypto world, including his company's ownership of World Liberty Financial and the Trump meme coin, which has reportedly earned over $100 million in trading fees. Connolly views this as a major conflict of interest and is calling for transparency on how the administration is handling the issue. The White House, however, insists that the digital asset stockpile will only hold confiscated cryptocurrency and that the strategic Bitcoin reserve will not use taxpayer funds. Connolly remains skeptical and has requested documents detailing the administration's crypto dealings and measures to prevent corruption. What do you think? Should the government be involved in holding a Bitcoin reserve, or is this just another way for the wealthy to gain more control? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.